Hello, everybody. Happy Monday. I hope everyone had a great Father's Day or Father Figure Day. I feel like it's not just a day for fathers. It's a day for any male role model who has helped raise you and
Or
gives you,
female
yeah,
role
or female.
model that has had to step into the male role model. Okay.
Exactly.
All right. Okay. Some mothers are mothers and fathers and everything else all wrapped up into one. Okay. All right. Just checking. Just making sure.
Anyway, I want to quickly just see if anybody has any questions about last class. Last class, we talked about sector rotation, so learning how to trade market sectors as opposed to just normal stocks. And we looked at relative strength, how to compare two different equities against each other to see which one is performing better in the short-term short-term direction or the long-term trend. So does anybody have any questions about that? Or Catalina, the videos sadly are not hosted on Zoom. We have them on Facebook though. Kira will be posting the link in the chat so you can check all of those out. Does anyone have any questions about the relative strength or any of the sector rotation stuff? If not, we can continue talking a little bit more about sectors today and go into some really awesome ways to look at the health or the risk of different sectors or different markets. Anybody?
I took some more nata today. We're impressed.
Sure, I can briefly kind of just summarize what we talked about. So the first thing we talked about was relative strength. We talked about looking at relative strength charts and how we can apply what we learned with point and figure to these same relative strength charts where our X's and our O's are now not telling us price direction, but they're telling us which is performing better, the one that I'm looking at or the one that I'm comparing it to. So let me just share my screen and we can go through a quick example of this, because I want to make sure everyone understands what we talked about last time, because a lot of it will come into play today. So what we do is we come over here to our friendlystockcharts.com, and when we choose point and figure, we're going to compare two different things. So the first thing we're going to compare is XLK, which is the technology ETF, and we're going to compare it against the $SPX, which is the S&P large cap index. So when we run this, this is no longer prices. $33 is not the price of XLK versus the SPX. This that we're looking at is the relative strength, or how good is the technology sector doing compared to the S&P 500. So the way that we read this is we want to look for if we're in a column of X's or O's. We see here that we are in a column of X's, and I'm going to disable you guys from being able to do annotations. So
hey, slow down.
We see here that we're looking at the most recent column. If we're in X's, that means that the first thing that we're looking at, or in this case, XLK, is doing better than $SPX, or the S&P 500, in the short term. If we are in a column of O's, it would be XLK is underperforming compared to the S&P 500. Now, we look at long-term. So to see long-term, we need to check what was the most recent signal or the most recent buy or sell that we had. So we do that by starting at the most recent column. So we'll start here at 1. And we're going to look to see if it's gone above the previous column of X's. That line would be right here. So we see that we currently are above the previous column of X's, which means that XLK
People are saying
on the long term is outperforming the S&P 500. Does everyone understand that so far? Awesome. So now there is the same thing that can happen in the opposite direction. So I want to just use this same chart as an example. I want to go back and pretend that we are back in time and we are right here. We are at this O at the very bottom. And now I want to ask the same question. What is performing better long term? To do that, when we are in a column of O's, we're not looking for where the O's go above the previous. We're looking for where the O's go below the previous. So we're going to go to our previous column of O's, and we're going to draw a line underneath it. So it's the same thing we did for the X's, where we drew a line above the previous column. Now we're going to be doing a line below the previous column of O's. So at this lowest point where the arrow is pointing to, we would have said that XLK was underperforming compared to the S&P 500.
Okay, Jonathan, when you finish with this explanation, let me have you do a little something.
Yeah.
Just a little extra, so let me know when you're done with this.
I did my little spiel on this. Do you want to, because what you're saying
Okay.
is good information, so this is a good time to
All
share
right,
it.
because Adriana asked a question, and she said, shouldn't we be comparing this to the SPY? Because when we're comparing ETFs, we compare them to other ETFs. And the answer is yes. Yes, when we're comparing ETFs, we do compare the SPY because that's the spider ETF. In this case, we're comparing it to the index. But if you really, really want to compare it to the index, the S&P 500 index is what they call capitalization weighted, is cap weighted. And that means that the companies that have a bigger capitalization count more. It's kind of like not a very democratic system. It's like saying, if you have more money than I do, then your vote counts more than my vote counts. And how they do, because capitalization is the price of the share times the number of shares. So of course, the large companies are going to have more of a say-so proportionately in the S&P 500 than the little weeny ones that don't have so much capitalization. So there's something called an equal weighted S&P 500 index, which is, and if Jonathan, if you change it to that, is $SPX EW for equal weight. There is the same for everybody. So all 500 companies have the same weight on it. And see the difference? In here, it's comparing technology to that. Yes, technology is still in an up, but see now it's a little different because you're not looking at the S&P 500 index being cap weighted, being weighted by how much clout you have, but everybody is the same. One company, one vote. And that's how it is. So when you want to really do all three things, and this is where you learn the basic, you make vanilla ice cream, and then you add the flavors, right? Or you learn to bake a cake, and then you add the flavors. Here's the same thing. You learn either the ETF or the index, but now I'm giving you three different choices. And also remember that when you are doing mutual funds, you're looking for the index that mirrors that investment the best. In the case of the S&P 500, we have three different flavors that we can look at. And it's interesting to see how they compare. I don't want to confuse you, but now you are to the point where you start adding that little je ne sais quoi to this so that you see the difference. I always like to look at the equal weight. That's all.
So something very interesting about equal weight that my mom just touched on is that every single stock in an equal weighted index is given the same amount. Everyone gets their one vote. That is also true for what's called bullish percent. And bullish percent, everybody gets their one vote, but their one vote is either a yes or a no. And they're answering a very good question. Are you on a buy signal or are you on a sell signal? So let's pull up a chart. Somebody give me a stock in the S&P 500. First one that comes to mind. Vive. Is Vive in the S&P 500? I think they're on the NASDAQ. Apple. I know Apple is. Oh, sorry, Francia, I didn't realize you had your hand raised. Are you there?
Yes, sorry.
Hello.
Yes. Hey, sweetie. I'm sorry, I don't understand why. I'm sorry, I'm going back to the previous chart when you were comparing the sector to the SPX. Why did you go to 17 to show the zeros?
Because that is the most recent sell signal that is on this chart. I wanted to find an example of where we would see a sell signal or where we see that the S&P 500, technology is underperforming. So what I tried to do was find the most recent example of that, which this is the only place that we would see it.
I guess I'm not understanding why that is the sell signal, I guess. That's why. Oh, I don't know. Yeah, I'm lost here.
Okay.
Okay,
Just
that's fine.
explain what sell signal is.
Yeah. So our point and figure buy signal is something we've talked about quite a bit, where it's our current column of X's went above the previous column.
Yeah, that I get.
So the sell signals are the same thing, but upside down. So now we're looking at where a column of O's goes below the previous column of O's.
Oh, okay. That's it. Yeah, that's below by the 7. That's July. Okay.
Right. So we drew our line right here. So the reason I went so far back in time is even up here, there was never a sell signal because the O's kept going up and never went below the previous column.
Do you want to see the longest running buy signal stock in the S&P 500?
I do.
Yes.
DHR.
This?
Yep. No. Do wait. I mean, compare it to the S&P 500.
Okay. What do you want? SPX, SPY?
Oh,
No,
God.
SPX. Wait, I had it already and now I can't remember what I did.
That is a pretty long uptrend, I'll give you that.
Okay, now look at that. Can you see back in 2008? That was the first. No, I'm lying. Do equal weight. Sorry. Do equal weight.
There we go.
All right,
Yeah.
There we go. It is in 2009. See it back there? That was the last sell signal. So for somebody who is a long-term investor that is investing in a long-term, we're talking turtle here, we're talking marriage here, they guide themselves by the buy signals or the sell signals like this. You would have bought it in 2009 and you'd still have that stock because it has not given a sell signal according to point and figure since then. That's all I have to say about that.
That is a pretty long time to be holding the stock, I'll give you that. I think
Yeah.
I've been holding my Disney one longer, but I've probably missed a few sell signals since then. But hopefully everyone's a little bit clearer now on our buy signal is our column of X's going above the previous column, and our sell signal is our column of O's going below the previous column.
And I lied because recently it had a sell signal in May.
Yes, it did.
Yep. I saw this before. Yep.
Right here.
Okay. So just until May, it had its first sell signal.
Still, it's been in an uptrend since 2010. So it's been in a very, very long uptrend, which is
for
still
10
very
years.
cool to see.
10
Awesome.
years.
So now we know what a buy signal and a sell signal looks like for point and figure. So let's go back to Apple. I wanted a single stock on the S&P 500. Now, everybody tell me, are we on a buy signal or a sell signal here? What is our most recent signal from this chart? Everyone's hitting the nail on the head. It is on a buy signal because we
Listen to
see
you guys.
that we are
Listen
in
to
a column
you
of
guys.
X's above the previous column.
So proud.
So
look what,
this is
excuse me. Sandy's even telling you what the buy price was.
So Sandy, that's actually a trick question. It's 356. And the reason it's 356, not 358, is because of the box sizes. We see that our numbers go up by 4 every time here. So it's tricky because you don't get to see what that number is. But the actual buy price would, yeah, you can see over here on the left-hand side. Thank you, Kira. 356.
That's why you need
But
Kira.
hey, if I was giving a test and I saw that answer, I would still give you full points. That is, yeah. So this stock right now is on a buy signal. So if we were taking notes and we were keeping score, Apple would have a 1. It would have a thumbs up or a yes. So say I did this now for all 500 stocks on the S&P 500. I add up all of the number of buy signals and I divide it by the total number of companies, which is 500. So now I'm left with what percentage of the stocks in the S&P 500 are on a buy signal. That percentage is called the Bullish Percent Index. And stock charts makes it super easy to see because we can go down here to sector summary. No, sorry, not sector summary. To candle glance. So from stock charts, we go to charts and tools. Then here you scroll down to candle glance.
On the top.
And then predefined groups. We want to scroll down to sector bullish percent indexes or major bullish percent indexes. Major bullish percent indexes will give us the S&P 500, the New York stock. Well, here, instead of telling you, let me show you. So now we get a crazy number of lines. It looks like an EKG. It's terrifying. Let's make it look pretty. Up in the top left under period, we want to choose point and figure traditional. And all of a sudden, okay, whew, now we know what we're looking at here. We now have point and figure charts. But again, these are not prices. What you see is the percent, bullish percent, or the percent of stocks in these different markets that are on a buy signal. So for example, BPNYA, if we look in, is the New York Stock Exchange Bullish Percent Index. And we see that it's currently in a column of O's, so it's going down, and we are at 68%. So that means that from all of the stocks in the New York Stock Exchange, 68.76% of those stocks are currently on a buy signal.
On a sell signal.
Buy signal.
Sell signal. Buy signal. Buy signal.
Mhm.
Sorry.
So 68.76% are on a buy signal, but like my mom was just saying, it is going down. So we are currently having more stocks going on sell signals. So we're having stocks go from buy to sell instead of stocks going from sells to buys. So this is one example. Now, let's look at our S&P 500. That is going to be down here at BPSPX. Also, if you're curious about what all of these different letters means, I recommend coming over here to this page. I will link the link in chat right now. And if you click on any of these charts, it will bring up the full chart, and up here it will tell you what that chart is. So for example, this is the S&P 100 Bullish Percent Index. So I recommend people take a look at this and explore it yourself. But for the purpose of the class, I just want to look at this, BPSPX, which is our S&P 500 Bullish Percent Index. So now if I were to read this, I would say that 71% of the stocks in the S&P 500 are on buy signals, but we lost 5% today. So the number of stocks on a buy signal has gone down today by 5%. So 25 stocks, give or take, switched from sell signals to buy signals. Does everyone understand so far? So bullish percent is a percentage between 0 and 100 of how many of the stocks within those markets are on buy signals and how many are on sell signals. And remember, it doesn't matter if you're the biggest company or the smallest company. Everyone gets their one vote. Everyone gets their one contribution to this number. So Apple is not worth any more than the smallest cap company in the S&P 500.
So when
Everyone
you're
follow
looking
so
at
far?
the A, when you're looking at the A of Be a Profit, which is atmosphere, you would look at the BP of the New York Stock Exchange, NBYA, and that's what you make your call on. How's the market doing? You look at it short term, how it's doing, longer term, how is it doing?
Okay. So just to repeat what I said, because this is kind of the whole meat and potatoes of it, bullish percent is 0 to 100%. For every stock in the market, we look at if it's on a buy signal, which means that we're in a column of X's above, or sorry, that the most recent column of X's is above the previous, or we're on a sell signal, which means our column of O's is below the previous column of O's. And then we do this for all of the stocks in the market, and then the percent of those that is on a buy signal gives us our bullish percent. So for the chart that we're looking at, which is the S&P 500, 71% of the stocks there are on a buy signal. Is there a way to know which ones gave the buy signal on the present day? It is tricky. There's not many places that do it, and most of the places that do it charge you, but I can show you the closest thing that we have. If we go here to stock charts and go again to charts and tools, over here on the right, we have our sector summary. Or sorry, no, not sector summary. Our predefined scans. Yes, predefined scans. Now this is giving us all of the indicators that we have. Remember, our column of O's going above the previous column is a double top breakout. And that is only one of a few different types of buy signals that we'll find in point and figure. So if we scroll down, again, went to charts and tools and then predefined scans. If we scroll down to the PNF patterns, we can see how many stocks in different markets are on a double top, triple top, double bottom. By the way, double bottom is our sell signal. Those are our O's going
It's
below
right
the
there in
previous.
the bearish. In fact, you can just take the top and compare it to the bottom.
Exactly. So this is the closest we have to being able to know.
Mhm.
Why is it a buy signal if it's a O? The reason it's a buy signal is because we care about what was the most recent signal. So let me actually go in here and see if I can find a good example for us. That's a horrible looking chart. Let me see if I can find an example.
What are you looking
quickly.
for?
Example of a buy signal, but in a column of O's. But the reason is we want to find the most recent signal. So we could be in a column of O's, but as long as we haven't gone below the previous, we're still on a buy
QRVO.
signal. QRVO?
Mm-hmm.
Corvo. Perfect. Yes. So, and Dahlia, don't worry, I see your hand up. I promise I will not move on until I answer your question. So right now, we are in a column of O's. So we look to see if our current column of O's have gone below the previous column. Has it? Has our current column of O's gone below the previous column?
No.
Perfect. So then we have to go one step to the left. Now we're looking at this column with the arrow here. Let me move it to the other side. This column. So we want to see, because it's X's, if this column went above the previous column. Our answer is still no. So then we do it again. We go to this column of O's. And we check to see if it's below the previous column of O's. Our answer is still no. Remember, we're trying to find the most recent signal. It may not have been for a while. There may be a lot of movement, but as long as it doesn't go above the previous column of X's or below the previous column of O's, our signal has not changed. So now, let's do this again. We are now at this column right here. Has this column of X's gone above the previous column? Yes. So that means our most recent signal is a buy signal. It doesn't matter that it's reversed a few times since then. It doesn't matter that we're in a column of O's. Our most recent signal is that it's above the previous column of X's or below the previous column of O's. Carolina, it's forming a sort of triangle. Yes, it is. And because it's getting smaller and smaller, the likelihood of a signal increases because the distance or the price change needed to pass its resistance level gets smaller and smaller. But that's a topic for the advanced class. Dahlia, I promise. Hi, are you there?
Oh, hi, I'm still here. You were kind of answering the question, and then when we look at the bullish percent, is this the one where this is the part where Julie was stating that it's divided into 3 sections, where it's up to 30,
Yep.
and then between 30 and 70, I believe, and then when it was too much. Am I right?
Exactly.
Okay, and that's what we would have to look at for the companies that were in between, or
sorry, I don't think
you go over, yeah. No. I'm probably confusing myself, but can you go over that 3 section part real quick?
That's what I was
The
about to
30,
go
the
into.
50, the 70.
Yep, that's what I was about to go into. So
Thank you. All right, never mind. Then continue.
No,
worries.
you got it. You're on the right. And just to go back to the triangle, because you're starting to see things. Carolina, you're right. This is a triangle. And if you notice, when this stock has done a triangle before, sometimes it has broken down and other times it has broken up the triangle. So a triangle, I had Corvo and I sold it because as soon as it started making that funny thing, see, I bought it at the right time here, but then it went up and it started just playing, just doing exactly what Jonathan has drawn there. I thought, forget it. I'm getting out. I don't know which way this thing's going to pop, if it's going to be up or down, but usually it's in a big way, either up or down when it's forming that, and it's kind of like a flag. They call that a flag. But you're right. See how you start seeing things and having a feel for it? You're moving up. You are becoming more sensitive to what your eyes are seeing. Good for you.
Exactly. So hopefully everyone kind of understands how we get our buy and our sell signals and how we take all of those buy signals and use it to get the percent, the bullish percent, or the percent of stocks in a buy signal. Now, going to Dalia's question, how do we use this information? What does this mean? Because again, like relative strength charts, you can't buy a bullish percent index. You can't, this isn't something you can go out and trade, although there are ETFs that will trade it. What we want to do with this is use it to evaluate risk, because this is telling us if a lot of stocks are on a buy signal, it could correct, or that means that it could be overbought, just like stocks could be oversold. So let me take a step back here. Actually, no. I'm going to take this chart and I'm going to turn this into art class. We have our 70 to 100 area. When we are in this area, this tends to mean that stocks have been overbought. There has been a lot of people buying into the market, and all of our stocks in our market are on a buy signal, or a lot of our stocks are on a buy signal, which can mean that there's a correction in store, because we see oftentimes when it goes all the way up really high, it seems to correct down very hard. Just like when we see our big lows, where if I drew this down here,
Oh, that is so awesome.
now
I
we
know how
see
you're
when we
doing
fall
that.
below this point, when we get into a column of X's, oh boy, do we take off. So it goes to show that the market will follow trends. Investors are going to be sitting there waiting to see when people start selling. And if they see people start to sell, oh boy, they're all jumping in. So you want to make sure that you're looking at this and seeing the risk of the market, where if we are really high in 70 to 80% range, there's not a lot of room to grow from there. Just like if we're down in this area, in the green section, there's a lot of room for stocks to take off. And then there's this white area in the middle, which is our kind of middle zone. It's good, it's not bad, it's not good. I wouldn't make decisions based on it, but it gives you a good idea of the health of that market. Is it a good or a bad thing if a stock is overbought? It tends to be a bad thing because investors want to be buying as the price goes up. You don't want to be that investor that buys the stock at the very top of its price. And when it starts going back down, the minute the price starts to drop after a big uptrend, everybody's going to jump and try and start selling off their shares. And the price is going to drop very quickly.
And can I tell you something that you can only know with experience? Do you see to the left, Jonathan, where that long set of O's goes from the red down to the green?
Mm-hmm.
Okay, that was a real drop in the market, and the BP went down and down and down and down and down and down, and then it hit 2%. the news were still telling us how the world was coming to an end as far as the market was concerned. This was horrible. This is worse than ever. This chart started going up in X's. And those that knew how to read it, that it's going from a column of O's, long column of O's, into a column of X's in the green zone. And Jonathan, you colored that perfectly. In the green zone between 0 and 30, get ready, because the market is changed its tune. And people started buying stocks and buying. And that's when I came out and I said, hey, look at Zoom, look at this, look at that. This happened in February. Okay, this happened in March. Right at the end of February is when I gave that, I think it was the 27th of February, I gave Zoom, because it got into the green area. It was still going down, but you know that the minute that thing starts coming up, that's the time for you to start buying. And still, the experts, the talking heads on TV were saying how bad things were, and this thing was on a tear on its way up. It did a little. See, here it has to change by 6% for the column to change, because it has to change by 3 boxes. Each box represents 2%. So it has to change by 6% to change boxes. But look, it went down only to get impulso, just more thrust to go all the way up. That, when you see that happening in an index, that is when you jump on it. That is when you start looking for stocks inside that index. And you're going to start finding stocks then that are also hitting bottom and that now are starting to bounce up. But you're going to see this before anybody else if you follow this index. And this doesn't lie. Look what's happened every time it's come down to there.
Exactly. These charts are very awesome to look at because it lets you evaluate the risk of a market and evaluate the health of that market. Like my mom just said, some of the most important times are when the BP gets below this 30% line, we get into the oversold period, and then we get into a column of X's. Because look, every single time we have gone below 30%, and then it reversed into X's, what ended up happening? The market has so much momentum, it is incredible. Where even with the virus, the market tanking because of the virus, that one correction led to a massive shift from 14% of stocks up to 78% of stocks being in a buy signal. There's one last thing I want to touch on before we kind of close out this little BPI
That's
example.
beautiful. You just wrote there. Amazing.
We've looked at overbought and oversold. Our overbought is 70% or above. Our oversold is 30% and below. But there's also bullish and bearish. You hear those words a lot, but what do they mean for point and figure or for bullish percent? Anything above 50%, which means the majority of stocks are on a buy signal, we consider as bullish. So anywhere above this green horizontal line is bullish, and anywhere below it is bearish.
Because think about it, above the 50 means that more than half of the companies inside that index are in a buy signal. And when it's below it, is less than half are in a buy signal. So it just begins to make sense to you that the current is changing.
Eliasara asked a really good question. Is it recommended to wait until it gets to 30% before starting to buy stocks? Or can you start buying when it is still below 30% and in a column of X? Below 30% and a column of X is the dream. That is us waking up to finding $1 million
But people are
on
going to
our,
think you're
on our
crazy.
doorstep.
People will call you crazy.
I mean, right
But-
here, though, this is a chart looking at 4 years. There's not one example on this chart that shows the BP going down and turning into X's below 30% and then going further down. Every time it has
Doesn't happen.
corrected and gone into X's, it has continued going up.
Now, don't tell anybody, okay? Shh. That's our secret. How many
investors know
about
this?
this?
Surprisingly few, because this requires
Yeah.
people to know what point and figure is and understand how to use it. Because again, I can show you what these charts are, just give you information, but that means nothing. Information's not useful unless you know how to use it.
Mhm.
And this here is how you can use bullish percent. Diego asks, what does correction mean? Bullish correction means that it was on a bullish trend and it's correcting back downwards. So it's losing some of the ground it made. So think of it like a football game. You carried the ball forward 10 yards, but then on the next play, you lost 5 yards. So you would say it was a 5-yard correction. So you're losing ground, but it's still ground that you had already gained before.
Okay, may I jump in on that?
Yeah.
Okay, just by being green, it's positive. It's a positive thing. So a bullish correction, the next step would be a bullish confirmed. So a bullish correction means that you're looking out because the bull could be around the corner. Because even though it turned red now, it is still trying to come up. So a bullish correction is a good thing. And the next step would be a bullish confirmed. A bear correction is when it's going up, but it has the intentions of starting to come down. A bear confirmed is when it's already declared that it's down. And they're going to tell you what it is. And I don't know, I mean, I don't see Vero there, but that's what they were putting in that chart, Jonathan, for the matrix. They were using all of those. You don't need to get so granular. If you just learn the 3 areas of this, especially the happy area, which is the green one, everybody is crying about how bad things are, and you're just waiting for that thing to bounce up. And when it starts bouncing up, yes, Eliazar, you break that piggy bank and you start buying.
And to the other question of, is the best index to look at the New York Stock Exchange to get a general feeling of the market? Or should we look at other indexes as well?
This
The
one
New York
covers
Stock
everybody.
Exchange is a good way to look at everything, but I would always suggest looking as well at the market you're looking to invest in. So for example, if you were looking at buying stocks in the S&P 500, I would look at that as well as what I'm about to talk about, which is we don't just get to do bullish percent for the markets. We also have bullish percent for the sectors. So it's important to try and get as narrow as you can. So start off big. Start off New York Stock Exchange, then get smaller, S&P 500, then get even smaller, sector. And then the last question before we move on, the buy signal should be 30%. Is that correct? So the signal I would be looking for here is below 30% and in a column of X's, which means that it's currently oversold, but is gaining ground. We are having more stocks going on buy signals than we have stocks going on sell signals. Awesome. Moving right along. Thank you guys for letting me have art class. Now, we just talked about how this can be
Everything
done
is Chino,
for
Adriana. You're
a
right.
single stock, or sorry, for a single market. Now let's look at, I pressed the wrong button. Let's look at our sectors. So if we go up here to charts and tools in the top left, we can go back down to candle glance, our predefined groups again. And now we're going to click on, instead of major bullish percent, which is all of our markets, we're going to look at sector bullish percent indexes. Again, we're going to get these crazy heart monitor looking graphs. We don't want that. Go up to the top left.
Garabatos.
Point and figure traditional is what we want. And here is 11 different sectors and their bullish percents. This is gold. This is what I always love looking at, because this is the information I use in addition to what is the best sector. This gives you information, just like we have for the markets, of how many stocks within each one of those sectors was on a buy signal. And there's some really interesting stories that we can find here. For example, when the market had its huge downturn in March as COVID started to become more of a problem, we see that discretionary, communications, industrials, materials, health, utilities twice, finance, and real estate all hit a BP of 0%, which means that there was not a single company in those sectors that was on a buy signal. But just as hard as they all went down, when we corrected into X's, we see that for most sectors, besides utilities that faced its own issues with various utility companies having problems meeting demand, we see that most markets, after they hit their rock bottom, they took off. They took off big time. So again, we can see how important following these charts can be, and understanding that this is not price, this is not relative strength. This is the health of that market. It is the amount of companies in that market on buy signals. And it gives you a great idea of when things in that market start to change, because we don't want to be in on a full boat that's riding heavy seas. We want to be the first ones on that boat, ready for when the water starts to go up. So that's my whole spiel. That's bullish percent in a nutshell. Does anybody have any questions or anything they would like to see further examples of?
And the less companies, the lower the number of companies inside the group, the more effect they have on the bullish percent. And that's when you're going to see them go to 100 or to 0. It's because it has a lesser number of companies inside.
Mm-hmm. Jose asked a question. How can we find the company when we find the bullish percents? So it's tricky because we don't get that information just spoon-fed to us. We need to kind of dig for it. So the two ways you can do that is the one that I showed before, going to predefined scans under charts and tools and finding companies that are on double top or triple top breakouts, because these companies are currently on their buy signals. Then the other way you can do it is, because all of our BPIs here are looking at S&P 500 sectors, then we can say, for example, if I wanted to look at discretionary, say that discretionary was at 20% and in a column of X's, and I wanted to buy into discretionary, I could go here and look at XLY, which is the SPDR ETF for discretionary. And then I could buy and trade this sector. Or I can wait until it goes on a buy signal if I want to be really sure.
Okay.
The last thing you
wait,
can
wait,
do.
wait, your screen is catching up.
Oh, I'm so sorry.
Yeah.
So you can look here. The last place that you can go is if you want to try and understand what stocks may be having the most, because remember, bullish percent, one company gets one vote. If you wanted to have more of a capital-based idea, you can go here to etfdb.com and you can search for a sector ETF. And then here on the left-hand side, we have holdings. And if we click there, we can see what companies that ETF is holding. Now this is going really deep, but if you want to use BPI to find companies, you can go down this route. Lucia asked an awesome question. What about Chartmill? Chartmill has
Relative strength.
yes, they use relative strength, but they use something very similar to bullish percent, but they call it the relative strength index, which is the performance of a stock compared to its sector. So now we're no longer looking at buys and sells. We are looking at, for example, Apple. How many stocks in the S&P 500 has Apple outperformed or is outperforming? So we can get their rank compared to other stocks within the same market or within the same sector. Bullish percent, because everybody only gets one vote, we are solely looking at that percentage of stocks on a buy signal. Not any sort of relative strength. We don't do any relative comparisons. It's only stock on a buy, stock on a sell. Do that for all of the stocks. Add up all of the buys, divide it by the total number. And that's how we get our bullish percent.
Can I show one thing?
Of course you can.
Thank you. Okay, I'm going to share the screen. And
Thank you.
I'm going to go to stock charts. And when you see that the bullish percent is going your way, this is also one way that you can get an idea of who is making the change. There's two ways. One is you go to, and we're talking sector still, correct? We're going to sector summary. And let me press control and move my little wheel, like my son taught me today. Didn't like it. Oh, pushed it too much. Okay, so you see that? That's what I mean. Okay. All right, so then here are the sectors. And let's say that, oh, see, now it's doing it to, I like the minus and the plus better, Jonathan, because it lets
You
me
went
do
all
it.
the way up to 500%.
I did.
too.
I went crazy. Okay, so now if we were looking at discretionary, correct?
Yes.
Where is it? Oh, I'm right there. Okay, so in discretionary, you go right here, discretionary, and it's going to show you the industries inside discretionary. So inside the industries of discretionary, industries is divided into even more granular groups. You're going to look at, let's just say for 1 week, okay, or for whatever. It's going to show you here who the leaders are. So here, specialty retailers did the best. See, these are the ones that lost. This is the losers here. These are the winners. These are the ones you want to pay attention to. So now you get into specialty retailers, and you press there, and now you get the companies. And you see Kirkland's, you see Overstock, Michael's Companies, iMedia, Bed Bath & Beyond, At Home Goods. Those are the companies that are the leaders inside there. Another way of doing it is go down here, and you're going to see complete industry summary. And this is really neat because you get to see it all on one screen. You get the industries, you get the sectors, you get the industries, and when you click it, you get the companies, and you can see them all in one screen. So I'm not gonna, go into that now, but you can play with this yourself. That's one way you can do it. Another way you can do it is looking at the market carpet. Has anybody gotten into that area just for kicks? The carpet is really interesting. Let me put this over here. I need to go to here. What's going on? Charts and tools. Okay, here on the right, market carpets, and I'm just going to go there. And for somebody that is visual, this will be helpful. Okay, this looks like a map of Google Maps or something, but what it's showing you is see, you're going by price, which is really what we want to do, or up days, down days, and it's showing you this is all one sector. This is another sector. This is another sector, and the dark green is the winner. And there, like, for example, this one right here is the winner. Nike is the winner today in cyclical. See how it shows you cyclical down there? All of these are cyclicals. This is materials, and the worst are the red. This, who did the best in consumer staples? This little guy here, Conagra Brands. Here's number 4. See what I mean? So it shows you here inside each one of the sectors who the winners are. And you can put it in for different amounts of time, or different, you can change all of the settings that you want. But this shows you, and it shows, this is a bigger company, these are smaller companies. And you can see whether the bigger companies are winning or the smaller ones. You can tell a lot by just looking at this. Yes, Eliazar, you have a question.
Hi, Julie.
Hi. Good.
Question. Okay, related to the same things that you're explaining there. When looking at the industries,
These are the sectors.
Okay, well, yeah, well, the previous screen that you were showing there.
Okay.
Another way, well, the way that I have told you before that I look at this other website, it tells me there which are the industries ranked by relative strength, and it gives me the performance. They're ranked by performance, but it gives me a per week, per month, 3 months, 6 months. Which time frame is the one that we should be looking at?
3 months. You look at 3 months. That's the longest you look at for sectors or industries. You look at 3 months. And then for you to see the momentum, then you start, or you can look at sectors made simple, and you look at the matrix, and that will tell you which way it's going. But if you're doing it manually, you start at 3 months and then you start moving it closer to see who's gaining ground and who's losing ground.
What about 6 months? 6 months is too far out?
6 months is a little far out. Think about right now. 6
Uh-huh.
months, we were in a different world, right?
Yeah.
We were planning our Hawaiian vacation.
Okay.
And then reality sets in. So for sectors, it's 3 months.
Okay. Yeah. I don't know if you remember a couple of weeks ago when semiconductors was number one.
Yes.
Well, they put it in by 6 months, but you can arrange it in whichever time frame you want.
Yeah.
Right now, which one is it? Healthcare information is the one that is at number one. Semiconductors went to number 3, but this is in at 6 months. If you did at 3 months, well, semiconductors is still higher than healthcare.
Okay. So it's told you what happened between 6 and 3 months, which is very helpful to you because you can see if it's gaining ground or losing ground.
Okay. All right. Perfect.
Okay. It's all relative. I wish it was easier, but that's all we can do is compare times.
Yeah. Okay. All right. Well, that was
Okay.
my, thank you.
All right. My pleasure. Jonathan, carry on.
That was all I really had for everyone today. I kind of just wanted to touch on BPI and how we can use this information, how you can not just learn how to read BPI charts, but learn how to use the information. Oh, Olga has a question. Does the buy under theory apply to only sectors? It does not just apply to sectors. It applies to markets as well. However, sectors, it is great information because it's harder to trade and compare markets than it is to buy and trade and compare sectors. Where sectors you have all within the same US S&P 500 market, 11 different like baskets almost that you can compare. However, with markets, yes, you can go out and buy a S&P 500 ETF, but it's a lot harder to compare the S&P 500 BPI to the New York Stock Exchange BPI and use that to buy or sell ETFs or companies. The way I always use it is I look at BPI to see the risk of markets, and then I'll use the matrix or I'll use relative strength to find what the strongest performers are. So then you don't just get what is the best performing sector, but you also get an idea of the health of the stocks within that sector, not based on capitalization. Remember, capitalization was what we looked at before with the $ SPX, which is how much money that company has is the amount of say that it has in the price. So Apple is going to be worth more than the smallest company in the S&P. Equal weighted is very similar to what BPI does, where all 500 companies have one vote. They're either buy or they're sell. So there, it's a lot easier to look at a big market and find the performance of that market, and then use that information to say how confident your buy or sell decisions may be.
Kevin,
Armin has
what
a
did you
quick
learn
question.
today? I just want to know what Kevin learned today. Did you learn anything today you didn't know before?
Kevin's being put on the spot. Wait, oh no.
Kevin is being put on the spot. Oh yeah, he is. He can
No,
handle
Kevin's
it.
been upgraded. There's a Kevin 2.0 now. Uh-oh.
Okay, no, I want Kevin Cruz.
We want Kevin 1.0?
We want,
this Kevin
we want-
1.0?
We want hair Kevin. Yes. Kevin, what did you learn today?
I learned.
Did you learn anything?
Yes,
What?
bullish percent.
And what does it mean?
It means like percentage, like to know how much stocks are on a buy signal.
You're absolutely right. And the bigger the number, the better it is, correct?
Yes,
But when it goes down to like below 30 and it's just running out of gas, what's Kevin doing? Kevin's ready, getting ready for the good times, right?
Yes.
So when it turns around, you're going to be ready.
Yep.
Okay, Kevin, you are such a good sport, and I pick on you because I love you. Okay?
Okay.
All right. Good.
Awesome. Great
This
to
is
hear from you,
great. This
Kevin.
is great. That's it. You got it. That's
Awesome.
all. That was the lesson today. And if you get that, all of you, you're gonna save a lot of money and make a lot of money.
I believe Carmen has a question. And then again, if anyone else has any questions, please raise your hand or feel free to ask in chat now.
Thank you, I do. So
Hey.
it's like
Hi, Olga.
a question, but in one of the examples you were showing us how to read this chart, specifically the one you have on the screen, you said 70% of, this means that 70% of the companies were on a buy signal.
Yes.
But you mentioned something about 5%, and I totally got lost there.
Yeah, so that was my fault. What happened was that bullish percent chart that we were looking at, I believe it was the S&P 500. Let me grab that. The S&P 500 today lost 5% of its bullish percent. So let's go back over to the other screen. Here
and it
we
was actually
see
more because it has to go down. 6% would be 3 zeros.
Yep. So
and
we see
one more. So 6 plus.
So each one of these boxes on this chart is 2%. So my mom's right that we went from somewhere between 78 and 76% down to 71%. So that was the 5% I was talking about is just what's changed today.
Okay, I was trying to do all kinds of other math calculations.
Good for
and I
you.
could
Good
not.
for
Thank you
you.
for
You're
asking.
not willing to just let it go. Good for
Thank
you.
you so much. Thank you.
Yeah, no, thank you. Hopefully everybody, well, oh, Galaxy S9 Plus has a question. Oh no! Where did my phone go? Did my phone disappear? Sad. Whoever Galaxy S9 Plus is, I like your phone. I have the exact same one.
And I have to tell you that I gave you information a couple of days ago, and I changed my mind. I tried to cut down the meeting to 200 people for the classes. I had like mutiny in my hands. It was, I can't. So I'm going to have to let Carolina know that this is important to you. So I'm letting you know so that you can base your decision on however you want to do it. Is I'm going to let everybody in. I'm going to answer as many questions as I can, and Melly too, during the meetings. And then what we're going to do is answer all the questions and send you all the chats with the answered questions so that you have them with you too. But that's the best that we can do. Otherwise, we can't do more than one meeting a week, and people just don't want to wait, and it got ugly. So come one, come all. So I just want you to know so that if you're not comfortable with that, then don't do it. Okay.
Awesome. Then last question from Adriana. Oh, there's also one more question in chat. Javier, I'll answer that
Adriana.
right after.
Adriana.
Adriana, are you there?
Tomorrow you'll get a registration email, everybody.
Hi, can you hear me?
Yes, I can.
Okay. This question may be off topic. It's for Julie. When you own stocks on your W-4 form, do you recommend adding a dollar amount?
You're so cute. You asked me that by email, didn't you?
I'm really curious because
I know. Okay. And I apologize that because I meant to answer it during the show and I printed the email and I forgot. No. Okay. A W-4 is what you put in to make your payments towards your taxes so that by the end of the year, you're paid up or as close to paid up as you can or a little overpaid if you want to overpay your taxes a little bit, right? That's your payment schedule. When you are buying and selling stocks, the stocks that you either have long-term, which is 12 months or longer, and those have less taxes due, or short-term, which are the stocks that you've held for less than 12 months. I don't know what kind of amounts you're investing. I mean, are you investing like hundreds of thousands of dollars?
Oh, no. Not at
Okay,
all.
not yet. All right. So not yet is the answer. Not yet.
Not yet.
Then what you do is you find out this. I would rather do it this way. Like if you were my client, I would recommend that you do is that when you sell and you make a killing in that sale, that you take a little bit of that, look to see what your tax bracket is, and look at your taxable income, look at the table, see what percentage you're at, and put that percentage in a little savings account for you.
Okay, got it.
Because if you give it to the government, they're not going to give you anything for it. But if you put it in a little savings account, it may turn out that you don't owe it anyway, and you have it for you.
Okay, because I was told to at least put in at least $50 or $20 from each check. And I'm like, not sure about that. Let me ask Julie.
Oh, you mean, okay, well, no, but you're talking now about your income, your labor checks, right?
Yes.
You should be paying something for each one. But the thing to do, the IRS, if you go to irs.gov, they have a calculator for you to figure out how many withholdings you should be paying and you should be claiming, how much you should be paying per paycheck. And you can do that as often as you want during the year.
Okay.
It's called Calculadora de Retención, withholdings calculator.
Okay, perfect. Thank you so much.
Okay, you're welcome. But no, when you sell your stocks, you keep your money until you have to pay it. Put in a little savings if you want to have it on the side.
Okay, perfect. Thank you so much.
You're welcome. I apologize. I printed it because I wanted to cover it and I forgot.
No worries. I'm sure you have a lot of questions that come up.
That's okay. You bugged me. The squeaky wheel gets the oil. Good for you.
Much.
Last question. Maria has a question.
Hello?
Hello.
Okay, Lacer, stop. You're going to make me cry.
Sorry, I just have a question really quick. Going back, I was trying to make sure that I understand this correctly. Going back to the bullish percent charts that you showed us for the sector one, the sector bullish percent,
Mhm.
I noticed that there was three of them, only three of them that are X's, which is, I guess it's the BP material, the staples, and the health. Does that mean that those are the only sectors that are
Finish it. Finish it.
that are doing well enough to
That are you okay? And finish that are doing well.
I mean, I don't know how to explain.
Short term.
Okay.
Short term. Okay?
Okay. Okay.
Because the X's or the O's tells you what it's doing short term. The
Mhm.
buy or the sell tells you the trend, the long-term trend.
Well, because I noticed they're all doing well, I mean, the ones that I've looked at, majority, I think all of them are doing long term. They're in an uptrend, but short term, short trend, it was only those three that are doing that are in an uptrend.
Okay? So those are the three you concentrate on because you're a mujeraza. You got it.
Okay. All right.
So
Because
don't
remember-
waste your time with the surrupia. You concentrate on the good stuff.
Okay.
Remember that
Yes,
those X's and O's are telling you what way it's going, whether it's going up in X's or down in O's.
Recently. Yeah.
all right. Thank you.
You're welcome. Es brujería, brujería, pure brujería, but it works.
Awesome. And then Daniela has one last question, and then I think we're going to call it for today.
Hi, Julie.
Hello.
So my question is, earlier when you were explaining of the graph, I already forgot what it was called. I think you called it the QRV, something like that.
Oh, Cuervo? QRVO?
Yeah.
When it was making the little banner?
Yeah.
Okay.
Is that supposed to be a bad or a good thing?
Oh, it could be either. That's why it went up, it gave a buy signal, I bought it. But then it started doing that little banner thing, which told me it's consolidating, it's kind of digesting. It's also stalling because the good ones are the ones that go up and then continue to go up. This one didn't. This one went up and then started like, should I? Shouldn't I? Should I? Shouldn't I? And if you look in the same chart, go back, chances are that that stock has done that before. And look to see if when it forms that, it has taken off after it or it has gone down. And that one has taken off sometimes and down sometimes. And I thought, I'm not taking that chance with you. So I sold it all.
Okay. All right, I get it.
Got it? But I made a little money, but not maybe as much as I could if I could hold on to it. But I didn't want to. There was other stuff I was interested in.
Okay. Thank you.
You're welcome. When you buy right, you should know right away. It should start going up right away. And if it doesn't, check to see why. Something, if it's not acting the way it should act, then there has to be a reason for it. And sometimes the chart is telling you it's not, and you're not going to know the reason until afterwards. Don't worry so much about the reason. Just make sure that you see that, hey, you're being weird. And no, not with your money.
To give you an example of a stock that I bought that was correct, I bought Apple in the market competition, and I'm up 27% with it. And I've held it for the past like 2 months. So
Wow.
you can find stocks like that. And I've also had stocks that, just,
Well, Zoom is up 47%. So, but of course, do I have it in the contest? No. Did I get it myself? Yes. Because I'm a pig. That's why. I'm sorry. Just kidding.
Okay, actually, I'm going to answer this one last question because it's important. Julie, how can I repay you for all the valuable information you provide for free?
Hi, Adriana, please give me your firstborn.
We
okay?
will-
No, just kidding.
We do our best to give you this information for free because it's information we feel like everyone should know and everyone can benefit from. We will sell things like the advanced investment class or like Sectors Made Simple that we will teach you how to do it without needing to pay. All we will do is we will give you the ability to pay if you want to have that information be easier and more accessible. So we will never charge you to teach you the basics and teach you the right way to do things. All we'll ask is if you have the money to want to spend and you want to make investing a little bit easier, we will have education and we will have tools so that you can
But it has to
help
be
support
worth your
us.
while.
Yeah.
And spread the word, spread the word, because the more people that learn about this, when we Latinos find out really how to do this, watch them pay attention to us. We're going to vote with our pockets. That's how the countries aren't run by the politicians. They're run by the businesses, the lobbyists, the people with the money. Why not you? So create your
Don't
own
just spread
world.
word about the classes too. Spread knowledge. Spread the knowledge that you've learned from these
Sin
classes.
caer
Share the
pesado, okay?
information.
Because if people are not ready, they're not ready. But that's okay. But just that's it. I don't know. Look, to see my son involved in this, how do you think I feel? How do you think I feel? This is...
I mean, you got me involved when I was 5 years old,
I
coming
didn't get you
downstairs and showing
involved.
cup and handle
I said one
charts
time, come
on.
over here and show me this. And I said, okay, go. And I never realized what an impact it had on him. But it did. So thank you. This is a vocation.
And we learn from this too. It's a pleasure to get to spend this time with you guys, to be able to share our knowledge that we love to kind of continue learning about. We teach this because we love this and we study this ourselves. So thank you guys for all being here, for continuing to be
See you
here.
next time.
Yeah, and we will see you guys all on Wednesday. All right. Take care, everybody. Bye.
Bye.